What is personal finance? Personal finance is about managing your income according to your financial situation. It covers the whole universe of managing individual and family finances, taking responsibility for your current and future financial situation, as well as setting financial goals. More than 3 in 4 Americans report feeling anxious about their financial situation. 68% of Americans are worried about not having enough money to retire, 56% keeping up with the cost of living, and 45% are worried about managing debt levels. However, personal finance is what makes finances a bit more manageable. Personal finance is more than a textbook theory. It is the foundation of how you live your life on your own terms. For example, managing your cash flow so that you have more money to spare, saving for the future so you can explore career options and not feel stuck in a job because you have a pile of bills to pay. Dealing with money can be overwhelming. In fact, 4 in 5 Americans say they put off financial decisions, and 35% of those delaying those decisions say it's because they feel overwhelmed at the thought of them. But it doesn't need to be overwhelming. In fact, knowing how personal finance works is empowering. At its core, personal finance deals with 5 critical stages: making money, spending money, saving money, building wealth and investing, and protecting assets. Making money or income refers to a source of cash inflow that you receive and use to support yourself and your family. It encompasses all of your earnings. Spending includes all of your expenses. Personal expenses are often categorized into 2 main types: fixed expenses and discretionary expenses. Fixed expenses are regular, predictable costs that remain relatively constant each month. These expenses are essential and typically do not fluctuate, such as rent or mortgage payments, property taxes, insurance premiums, loan payments, utilities, internet, and phone bills. Discretionary expenses are non-essential costs that are more flexible and can be adjusted based on personal choices and priorities. These expenses are often considered wants rather than needs, such as dining out, entertainment, hobbies, travel and vacations, non-essential shopping like clothing and accessories, and subscription services. Saving refers to excess cash that is retained for future investing or spending. If there's a surplus between what you earn as income and what you spend, the difference should be directed towards savings or investments. Recommended amount is at least 15% of your income. Investing relates to the purchase of assets that are expected to generate a rate of return with the hope that over time the individual will receive back more money than they originally invested. Protection in personal finance refers to a wide range of products that can be used to guard against an unforeseen and adverse event. Common protection products are life insurance, health insurance, and estate planning. Now that you learned what encompasses personal finance, to keep boosting your confidence, I recommend next steps for you should be to A. Improve your financial skills by understanding what is financial literacy and learning about budgeting, which is the most important step towards financial peace and wealth. So go ahead and check out these 2 videos. The one from the Dave Ramsey Show is an interesting real-life example. And if you want a free template to start and create a budget, find my email in the About section of my channel and I will send it to you for free. And as always, please don't forget to leave your questions and recommendations in the comments, and like, subscribe, and hit the notification bell so you won't miss the next week's video. And I will see you there.